live from the financial capital of the galaxy. This is Blood Money. I'm your host, Rose Rosenthorn. Join me and the Predatory Lender team as we cut into today's action. Today in the studio we have our Chief Marketing Analyst, Annie, and from afar we have Brad Kuka, Jarbon, and Chart to discuss different stocks. The markets are mixed this week. What do you think of the charts, Chart?
The markets were kind of mixed this week all across the board. Now, when you look at the charts more closely, you can see that the Dow Jones, of course, has been in the technical up move since the mid of July and has been moving in a stair-step pattern ever since, and currently is sitting on good solid support. Stochastics has moved down a bit towards the mid of the range and is now indicating a move higher for the beginning of next week. And when you look at the Bollinger Bands for the Dow, you can see too that it's come off the upper band and down towards its 20-day moving average and is sitting on good support and is starting to move higher. So I see next week looking good for the Dow. As for the Nasdaq, it too has been rising up since the middle of July in a stair-step pattern and is now currently sitting on good solid support above all of its moving averages. It's had a bit of a technical rundown in the stochastics to the middle of the range, but it is starting to indicate a possible move higher. Then when you look at the Bollinger Bands, you can see the same thing too. It's on its 20-day moving average, but stochastics is getting kind of close to the upper band, so I don't see much upside for the Nasdaq next week. As for the Standard & Poor's, it too has the same general up move since the middle of July in a stair-step pattern, and is currently sitting on strong support. Stochastics has come down a bit of late, and is in the middle of the range and indicating a possible move higher. So I see some upside there, and looking at stochastics, you can see that it's in our Bollinger Bands, you can see it's in a nice narrow trading range. So there's not much upside for the S&P next week. So I'll send it back to you folks at the studio.
The insurance sector is having tough times. What is going on, Jar?
Now we're here at an insurance industry conference talking to some folks in the insurance industry. Now the insurance industry is having some tough times of late, and you can see of all the stocks in that sector, only one of them makes it into the buy camp at this time. And that's Reinsurance Group of America with its 4.25 out of 5 stars and its dividend yield of 0.8%. It is the strongest one in a weak sector. Now technically looking at the chart, you can see it's in a bit of a sideways trading range and is sitting on good solid support. Stochastics is kind of near the bottom range and it's oversold and is moving higher. Now this one is clearly the strongest one in a weak sector. Now for more on the hardships in the insurance sector, we talked to Metlife and Axa Financial here. What can the two of you do to make your companies better? Who would like to go first?
I'll go first, I guess. Well, to make ours go better is, with every life insurance plan you get a bunch of bananas, and not just the normal sized bananas. You get the small ones, the miniature ones, because you get it's bite-sized bananas will be more fun if you buy life insurance through us.
And MetLife, what can we do to make your company better?
Well, we're going to give everybody even more chocolate chip cookies. And also, they get a free psychiatric evaluation from Lucy. That's a 5-cent value for free, everybody. Yeah.
Now, I know people are having trouble losing their jobs and stuff. Do you guys see the unemployment rate affecting you guys' companies?
Oh, no, not at all. No, not at all. No. We're stronger than we look. We're just going through it like a little thing right now, But we'll be better in no time.
Okay, and how's unemployment affecting you folks at AXA?
Well, I'm sure it's affecting us a lot because if people lose their jobs, they can't afford us. So that means we have to raise our rates for the people that can afford us, and that way we'll make the money for the people that lose their jobs.
Now, finally, in the next 12 months, do you feel that your stock prices will be moving higher or lower due to these current changes that you'll be making?
Well, I think they'll be a little higher just because we're going to raise our rates to make up for all the people that we're going to be losing.
And Snoopy, do you see your stock moving higher or lower, or what do you see your stock in the next 12 months or so?
Oh, we're going to be moving sky high, all the way to the top, baby. Yeah!
Okay, again, this is Jarbon talking to you about the insurance sector.
This week on Petals and Thorns, we're going to discuss some different stocks. The first one is Alcoa. It is up 12.47%. What do you think?
Alcoa up 12.47% on a JP Morgan analyst upgrade, causing it to jump to its 300-day. Stochastics is in the mid of the range and is moving higher. This heavy metal stock is out of the recycling bin and moving higher. But look out for a double top.
Our next stock is American Express. It is up 3.64%. What's happening there?
American Express is also taking off. Must be people charging at the stores. It's recovering from the earlier month losses, but it's leveling off at 40.
Our next stock is Bank of America. It is down 3.99%. What's happening there?
Bank of America was not the Bank of America this week, down some 3.99%. The stock is narrowing and technical support levels and at a bottom of the band.
Our next stock is GE. It is down 1.73%. What's happening at GE?
GE down 1.73% this week on news of them selling off another business, Fanuc Automation. At the rate they're going, how much longer will NBC be with them? And when they do that, who knows what kind of company you'll have after that.
Our next stock we're going to talk about is Intel, and it is down 2.74%. What's happening there?
Intel down 2.74% this week and is heading lower on poor stochastics.
Our next stock is another downer, JP Morgan, 1.87% down. What's happening at JP's?
JP Morgan down 1.87% this week, along with the poor banking sector. Stochastics and technicals are weak and indicating this one is moving lower.
Our next stock we're going to talk about is Coca-Cola. It is one of the up ones, up 2.82%. Good for Coke. What's happening at Coke?
Coke is beating out its competition. The red Coke Santa is selling like crazy.
Our next stock we're going to talk about is 3M. It is up 4.49%. Good for 3M. What's happening there?
3M up 4.49% this week on a Citigroup analyst upgrade, saying that this company will outperform its peers over the next 9 to 12 months. They have a target price of 92.
Our next stock we're going to discuss is Verizon. It is going up and away, 3.15%. What's happening there?
Verizon is up 3.15% this week on news of they will not be buying DirecTV. This frees them up for more internal matters. Technically, the charts have been in a breakout all month, and until stochastics lose their embedded status, this one will continue to run higher.
Our next stock is an oil stock, ExxonMobil. It is down 1.91%. What's going on at Mobil?
ExxonMobil is like all the gasoline. It's heading down. People hope it will return to its June highs, but are hedging their bets that will not go below its July lows.
Well, that's our show for this week. Hope you enjoyed it. Happy hunting.